Greetings, Dr. Jeffrey Scott here. This is my this is my Thursday night market MRI Pro update for 5/22/2025. This is already take three. I'm not going to go start over again. Markets were mixed, faded from the highs of the day in the last 30 minutes and continued, I think, jitters about bonds and rates. Again, it's May 22nd, 2025. Email address marketmripro@gmail.com, htsidoc@gmail.com. Join my Google Groups, Top Down Trader. You'll get first notice of when I post these, as well as some members only exclusives, videos, training, and discounts. As always, this and every one of my videos is for educational purposes only. Anything I recommend should be taken in the spirit of a recommendation and not investment advice. The intent of this and all my videos is to demonstrate the tools of top-down analysis and how to apply them. Trading involves risk. You alone are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky and you should consult with your financial advisor before making trades. And I have tools for multiple platforms, but I'm an independent trader. Memorial Day webinar, Words and Wisdom of Ian Woodward. I'll be using HGSI, where it all started, www.highgrowthstock.com, as well as my Market MRI Pro tool, reviewing the things that I learned from Ian Woodward. Monday, 10 a.m. Eastern Time. Links will be in the remarks section. Hope to see you there. Of course, there's no charge. Orange County, 3 days of education, 5 speakers, $400. June 6th through 8th, Residence Inn and Suites, Tustin, Orange County. If you've never been there and you can't get there live, do the internet. Even if you can't participate on the internet, you'll get the videos and my PowerPoints. And if you don't have Market MRI Pro, you'll get a trial a week before and 2 weeks after the meeting. And then you'll have the opportunity of getting back most of your $400, at least 300 of the 400, as a discount on the Market MRI tool for participation in the meeting. For more information, please contact Greg Mills at gam72054@aol.com. And I've already confirmed some great speakers, probably 2 on Friday. I would hope John Person and Dan Fitzpatrick on Friday. Chris will kick us off on Saturday, followed by Matt Caruso. I'll fill in the times before and after, and we're going to have a great meeting as we always do. Join my Google group, Top Down Trader. Sign into Google Groups, look for Top Down Trader, and then you just got to let me know how you want to be notified. Is it something you want every email, which sometimes it's interactions with other people in the group as well, or do you want to digest? Know your news and earnings. We have home sales on Friday. Got one Fed head at the open, and then don't forget Powell speaking over the weekend. But I would think a commencement would be a really stupid time to have a policy change. So I wouldn't expect anything. We did have some market moving earnings, or at least stock moving earnings after hours on Thursday. Deckers is down 14%. Ross Stores is down 10. Workday is down 6.7 on the big misses. On the upside, Intu is up 8.2. Autodesk is up 3. And then Mirus is showing what happens in biotech when you have positive results. Expect a flurry of biotech move over the next several days. The ASCOs for the abstracts for the ASCO meeting were released this afternoon, which means analysts will be poring over them looking for any market moving trial results, which will be presented at the meeting. Hints are often given in the abstracts. Get a lot of biotech usually moving now for the next couple of weeks because of the cancer meetings. I'll be there. When I do my videos, I'll tell you what looks hot. All right. So let's start with the daily briefing. This is my Market MRI tool. I'm going to try and go pretty quick tonight because I don't think there's a long list of what you need to be doing going into the weekend. Let's rank one-day close by top. You could see Bitcoin, big move, 2.31%, just keeps getting higher. Dollar was up 0.27, Qs were up 0.19, diamonds 0.02, spider 0.16, and the Russell 0.28 to the downside. So in reality, except for the dollar and Bitcoin, everything there was pretty flat, and VIX, VXX was down less than 1%. So not really much happening on the indexes, except boy, Bitcoin is strong. If you look at new high, new lows on the NYSE and NASDAQ, new highs minus new lows have gone negative at 52 weeks on both. That's a little bit of a bearish development. If we look at what was working one day change on the S&P 500 sectors, the only thing positive is discretionary. Industrial materials followed. If we look down here at themes, retail, cybersecurity, cannabis, uranium, cloud computing, fintech. So there's some growth stocks name. And spoiler alert, I think if there's interesting things to show you tonight, they might be in the cybersecurity camp, and I'll show you two or three that I like. Over here, the big thing to show you is that the number of advances, 39% on the S&P 1500, 46 on the NASDAQ, and 43 on the NYSE, are significantly higher than yesterday. Yes, more stocks were down than up, but at least we got closer to that 50-50 break-even day. You can see that most of the sectors were down. Only 1 out of 11 was positive, or 9% in the S&P 1500, 2 on the NASDAQ, and 3 on the NYSE. And you can see more industry groups were up compared to the prior session. If we look at the buckets are not giving me a signal. I'm going to call it neutral. I do not have enough below the Bollinger Bands to say we have a signal. Clearly has come off and overbought. And we often talk about that 13-week new high, new low, which I usually track best on TC 2000. And it actually hit a high on the 16th, I believe. I have to go back and see what the date was, but it's come off of its high pretty strongly, which is good because we were overbought and we're not overbought anymore. If we look at market breadth, we've now finished the batch update, as you can see. NYSE creeping lower to the 200. That's okay. It's bounced from there before. And the NASDAQ was actually go back here. Really didn't do as much. It was up while the NYSE was down. If we look at volume, a little higher than yesterday on the NYSE, lower on the NASDAQ, you can see the breadth has come back to earth. Stocks above the 20, 50, and 200 have filtered down. If you look at the stocks above, we're above 80% back here as the markets crossed above the 200. That was clearly overbought, and we can see how the markets have drifted down. When we look at new high, new lows, they're negative on both the NYSE on the left, NASDAQ on the right. AD lines negative, up downs were slightly positive on both. So even though you had more stocks down than up, the up down volume was slightly positive. If we go to the timing brief, the big news here is the daily hasn't changed. The dailies are all in a buy. I don't expect that to change unless there's a massive move on Friday. The weeklies have been bouncing around with the diamonds and the spider. Whoops, I hit the wrong button. I apologize. Changes to weekly. The Russell and the diamonds have broken into a sell. If the market was to close here again, until the weekly bar is closed at 4:15 on Friday, it doesn't count. We remain in a weekly buy on the spiders and the Qs. How do we were in a retracement in a downtrend. For a week, it looked like we might be breaking out, and now we're back into choppiness. So I think this is a market at least under pressure, how I would describe it. If we look at the indexes, you can see the spider is above the second trend, but broke below the first trend line, still above the 200. As we know, it was down a bit, 0.16. Qs are above the 200, and both these trend lines, they were a little stronger in the market, and they were plus 0.19. The diamonds were up 0.02, really flat, and they unfortunately could not hold the 200. That's bothersome to me. The Russell never made it to the 200, was actually only down 0.28, but it popped through a wedge, which is never a good thing, as did kind of the diamond. So I'm a little worried. I mean, yes, the big caps, the spiders and the Qs are keeping us up, but I think with the diamond breaking down potentially in the Russell, this market certainly is under pressure. Dollar after being up, VIX after being up on Wednesday, on Thursday, was down just a bit, 2.36%. And the dollar was, actually it wasn't 2.36, I hit the wrong bar. Actually, show. Oh, that's because the other one was VIX. The VIX was 2.36. The VXX was less than 1%. You can see the dollar moved up a bit in the market. I think it was point 0.27. If we look at commodities, gold didn't do much, was down 1%. Silver pulled back to the 50. Um, Gold and silver stocks have been super strong. This thing was due a bit of a pullback, so I'm certainly not surprised. Has not broken down at all. Oil can't get above the 50. Natural, I heard that they were going to increase supply, so it's down 0.67. They being OPEC. Natural gas struggling at the 200. And then, one of the things that concerned me a lot in yesterday's group was that we broke above the trend line, kind of traded back under the trend line today. The 10-year was down 1%. The 30-year was down just a bit, 0.39%. But I think the key is we're still above 5%, and that's a problem. I don't think the market likes a 30-year above 5%. And I think these things have been pressuring, not think, have clearly been pressuring the US markets. Now, the ratio charts will give me a sense of what's working. Up here is Bitcoin versus the SPY. I mean, it's all-time high. Whoa, that's all I could say. Discretionary turned up a little bit today. Staples, not too exciting. Industrial still very strong. Utilities not doing much. Neither are real estate. Healthcare not. Technology came back off of its recent run. So this is Bitcoin and industrials and maybe discretionary that look like they're leading with followed by technology. I go into the JAS layout and I can do a lot of different things. Let's just go into top down. Now, let me back up a second. I'm not looking at the S&P 500. I'm looking at my list. It's called the Impulse list, the JAS list. It's all the stocks of the NYSE, the NASDAQ, and the Amex filtered for $1 and 100,000 shares. And that's what I scan from. There's 3,500 stocks in that group. And if I put them into sectors, they'll look different than the S&P 500 because there's 3,500 in industry groups. If I rank them by sectors, the two that come to the top are cyclical, which is discretionary, and technology. If I take and look at the strongest industry groups and take the top 10, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Now I'm going to come down here and I'm going to filter these for $5 and 500,000 shares. And that's going to take 237 to 149. I'm going to rank them by 2-day momentum and start at the top. IonQ, I believe, is one of those quantum computer stocks. We liked ARQQ and Qubits over the weekend. They've continued to go higher. I'm not sure I'd be buying it here. Urban Outfitters, big gap up on earnings. And this is the stock that I like the most tonight, CyberArk. I like the run up, the pullback, sort of a complex bottom on this 200, pullback here close to the 50, and a breakout here on good volume, breakout momentum from the squeeze with relative strength looking good and OBV turning up, not extended. I look up here and the earnings came out the 13th, so we got almost 3 months for the next earnings. Nice surprises quarter over quarter here. Not as much on revenue, but big surprises on earnings with quarter over change growth. And I like CyberArk here. As I said, that's one of my favorite. Qubits, that was one of the stocks that we liked over the weekend, one of the quantum computers breaking out nicely. Hard to chase it here. Goose, I remember when this was Canadian Goose first came out, it was a hot IPO. Let's see what a monthly chart looks like. You can see a big run up, and unfortunately, it sundowned after that and it hasn't gotten back since. It had positive earnings and starting to make a move. If I throw in the weekly, you could see how this thing's been dead forever. Eventually, it might recover. Maybe now is the time. And if we look at the earnings, we could see they had a big beat. 64% change with a 43% surprise. And even though the revenue was lower quarter over quarter, it was 183% surprise. Retail starting to move. Don't know if they have a good tariff story come from Canada versus China. CrowdStrike is the second of the cybersecurity stocks that I thought was interesting. Um, it's a little higher up in its pattern than CyberArk. I like CyberArk better. And then CHKP is another one I like, sitting on that 50. So those are three that I'll be paying attention to, although look at where we are. We got a holiday weekend coming. There's 3 days. Think of all the news that's going to come out on the big, beautiful bill that made it through the House, tariffs. What else is our president going to do to rattle the markets? I think you got to be a little cautious here. That's just my personal opinion. So I may be looking at cyber, but I'm not looking to use up all my cash. Have a hard time going short here as well because news works both ways, as we've seen. Now, if we go to the impulse view, we can look at markets a little different. And let's just throw in my 2-day momentum up, which is my favorite scan, leaving in the 5 and 500. It takes a second to run through. And only one stock's Weibo. This is a stock that I've owned in the past that I like a lot. It's a retailer. I think it's an internet retailer, but look at all these blue dots, the big volume, the relative strength OBV, not extended, taking out the 200 and the 50. Over the last 2 days, it's a Chinese stock. So if you don't like Chinese stocks, be careful of that. And then the other thing that we can do is we can just lastly look for pullbacks and uptrend, price greater than 5, volume greater than 500, hit OK, rank them by dots, and let's see what comes up to the top. PBI, it's a beautiful looking chart. It's kind of sloppy to call it a cup and handle, but you look here, a cup, handle, and a breakout after a failed cup. It's Pitney Bowes. What do they do? I mean, I remember them when they made cash registers and stuff. But a nice move there. AAP, auto parts, big breakout on earnings, massive volume. That's a pretty impressive move. Is that one of those Kulamaji episodic pivots? Hertz looks interesting, but buyer beware. This move was on the basis of some hedge funds coming in with some money. And then it came out that, hey, they still could go bankrupt, and now they're moving again. I'm always suspect when that bankruptcy story. And then we get right back to CyberArk. So that was 17 minutes. We did a deep dive into the market. I assessed my market position. Careful, concerned. Can still go higher, but right now it looks like we have a little bit more risk. I identified what were the leading industry groups and sectors. We liked cybersecurity. Found the stock I like, which is CyberArk first, maybe Weibo. It's probably too late on those quantum computers. If you'd watched on Sunday, you would have had your chance. We'll see you on Saturday for my video come out, and hope to see you Monday for the Memorial Day special. Thanks, everybody.